Trent Brandon Rogers, Bradshaw Financial Planning, and Mind Your Money. Thank you for joining us for this market update. Today is January the 30th, 2023, and we're going to talk a little bit about rate hikes. We've got one potentially coming up here on Wednesday, and we'll touch on the portfolios, but then also look at a couple headlines and see how we interpret those. All right, let's jump right in. You'll see a couple headlines that we'll put up on the screen for you here. Really what we're looking at is the economy strong at this point or improving at this point, or do we still have underlying difficulties that potentially could cause some instability moving forward? But check out some of these headlines. On January the 9th, 2023, we got a headline from one of the analysts that we follow, and it says, "This is not Goldilocks." And to kind of explain that, what we're looking at is it a situation where we have lower inflation going down. We believe that is happening, but it also needs to be higher growth or companies accelerating. The issue we've got right now, we're seeing that slowing at this point. We expect that through the first and second quarter. So that could be a hiccup in the overall plans of the market improving rapidly here in 23. Second headline that I'll talk about, look at it, existing home sales. They declined 1.5% in December. Why do I point that out? Because the real estate market makes up about 1/5 of the overall GDP as far as growth in the United States. If we're seeing a decline in December, and we've seen months of consecutive declines in regards to this, it's also painting a picture of difficulty that potentially would be on the horizon here in the next few quarters. The next one says, look in the rear view mirror, looks okay from what we had last year. Some of the data's improving going into the end of the year, inflation coming down, but we potentially have a collision coming ahead. Why do we look at that particular situation as being a negative? Because when we look at the leading economic indicators, about 7 of the 10 right now are negative. And we're seeing that continuing to deteriorate. And we expected this in the first and second quarter. And we really built the portfolios around the fact of being more defensive from that standpoint. But the last headline that I'll bring up, personal income rose 0.2% in December. That's another, I guess, weight on the overall economy is when we look at wage inflation. That's something that's not going to go away. Think of it this way. If you have a job and you're earning $20 an hour and they increase your salary from $20 to $25 an hour, you're not going to accept it too well if the company decided to bump you back to $20 an hour. So wage inflation is here to stay. It's not going anywhere. So again, that could put another drag on the overall economy here in the short term. But touch on interest rates and how you think the Fed's going to battle that going forward here.
Yeah, so the kind of narrative of last year and also during COVID, the whole saying was don't fight the Fed. So we're paying very close attention to these rate hikes. Obviously, we had a ton last year. Massive rate hikes in the past 40 years, right? So going into this year, the Fed's basically kind of hopefully going to take the foot off the gas, so to speak. So we do have a Fed meeting coming up February 1st, which is Wednesday. And the expectation is about a 99% chance that the Fed will raise by 1/4 point, so 0.25%. So again,
that's happening based on the statistics.
That's pretty much, we think, probably already priced in. Again, all last year when he made the rate hikes, the Federal Reserve Chairman Jerome Powell, he gave us some insight about where it would be, and I think he really sticks to it from that end. So again, market has basically a 1/4 point in there. Next one is coming up in March. That will be the next rate hike potentially, about 87% chance another 1/4 point hike. At that point in time, they'll kind of wait and see. Throughout any of these rate hikes that happen, you're waiting to see what the commentary is after the fact and if they really do stick to what they say, right? So hopefully that 1/4 point will be there. They're going to continue to evaluate data as that comes in, so it could change. Fast forward to maybe the end of the year in December, they could potentially even do rate cuts. So again, that would be very interesting, and to see how the market responds from that.
Well, historically, the market would react pretty positively.
Oh yeah, absolutely.
I mean, it's just, in other words, it's a raging scenario where you have a lot of buyers when you start to see rates coming down.
Yeah.
And it's when you brought that to my attention and showed the probability going into the end of the year that we might have a rate cut, I'm not sure Jerome Powell's there yet, but it may be coming. I think it all depends on where the overall economy drives in the next quarter or two.
If he can see this inflation kind of staying stable or especially going down, that will be a positive sight for him to look at. But again, they do take that data in as it comes. So for that reason, in the portfolios, we still do have some defensive positions in there, precious metals that are in there, some buffered strategies that are still there, and also dividend paying stocks. Again, they tend to do better in a market like this. So again, still not out of the woods yet. The data is getting a little better. The rate hikes are kind of decreasing, and they're not as crazy as they were last year. So again, we'll wait and see, but right now we're going to still hold to kind of where we have and just keep those defensive positions in the portfolio.
But as we get updated information and statements from the Fed, that will drive us in making the decision on adjustments to the overall portfolio. No matter how important we think earnings are, we think the Fed, the money supply liquidity that's out there right now is going to justify what the overall market does.
Yep. So again, don't fight the Fed. That's still holding true.
Exactly.
So again, any questions, just let us know, but we will continue to monitor, keep you guys up to date, make any changes as we see fit. But again, thanks for joining us today. It's Brandon Rogers and Trent Bradshaw, Bradshaw Financial Planning, and Mind Your Money. Take care.